across the globe, thank you for tuning in and welcome to the 2139th edition of Short-Term Trading live with Oscar Carboni. Traders, I am really good at technical analysis and teaching people how to apply that towards market movement going forward, and I am here to teach that to you. This 2139th installment of these educational videos coming at you on a Sunday night for trading Sunday through Monday. That is July 26, 2020. Please know that trading stocks, futures, ETFs, anything like that is extremely busy, will cause substantial financial loss one day if you're not paying attention, is certainly not suitable for all traders, okay? Put your stops in, put them in first. Know you can blow out in this business if you get it wrong. And make sure you pay attention to the risk management. For you traders that understand risk management, get the risks and put your stops in first before you trade. You can follow me into what's going to happen tonight and tomorrow. So, for trading, as I mentioned, on 7/26, we are looking at a red Omni in Russell, OMNI S&P, and the other U.S. indices. As far as U.S. indices are concerned, and the Omni, last week, and we killed it every day during the week, and we're already up big dollars tonight on Sunday, I swear to you. We're doing really well. Omni warned us with mixed Omni signals on Wednesday evening into Thursday, then it flipped bearish on Thursday night into Friday and has remained bearish, and Omni stays bearish for trading on Monday, at least for the first part of the session. So Omni was really stellar last week. It showed us where to get long, get long, get long. Then it said, you know, the music might be stopping temporarily, and it was right on the money. And now the market's coming down, and at the same time, Omni's had us long gold, long silver. Wow, thank you, Omni, thank you. But the way this works, head down, nose to the grindstone, on to the next trade, you know what I mean? We never expect the next one to win, but so far so good, thank you, Omni. So, as I mentioned, Omni kept us in tune all last week and Sunday night, told us to get long gold. We got long gold right on the opening on Sunday evening at 6 p.m., and so far Omni nailed the lows in gold for the evening so far. So gold remains bullish, OMNI S&P, Russell remain bearish. The dollar is key to metals continuing higher. Traders, there are a lot of metals bulls out there. There's gold bugs, there's gold bugs, and there's silver bugs like crazy. You almost never find bearish silver and gold traders, always the bullish ones, right? And they are piling into this. And I'll tell you right now, it'll stay okay as long as the dollar continues to drop. If that dollar turns around and starts to head up, silver and gold is priced in dollars. If dollar does this, silver and gold will do that. Not exactly day to day. It doesn't work exactly every second. But we've had dollars doing this lately, and you see gold and silver doing that, right? 39 years deep. It's a simple formula. If you start to see dollars do this, you will see gold and silver do that. Just keep it in mind, okay? For now, I'm bullish silver, I'm bullish gold. Actually, silver's the widowmaker, and I sort of keep it on the sidelines, trade it every now and then. But I'm more bullish gold than silver, like buying the dips in gold. I even like the gold mining stocks, the GDX. We'll have to take a look at a bunch of stuff. So again, Omni warned us that the music would slow down a little bit. A temporary top for now. Nobody's calling top. We're just selling the Omni because the arrow's red. We're selling the OMNI S&P or the Russ. Gold absolutely remains bullish with the green Omni. And I'll show you in a moment that this is all wrapped around the US dollar. Dollar is key to the metals continuing higher. Traders, subscribe to these videos, please. While you're here, I put these out just about every night. They're very timely. They're full of fantastic information. What to do the next day. Actually, what to do right after the video's watched. So make sure you subscribe to these videos and know when they're getting put out. And finally, join me in my free live trading room at livewithoscar.com. No credit cards, no nonsense. Just come hang out with me. You're all home, right? We're all stuck home right now due to COVID. So if you're hanging out and trading, join my free live trading room at livewithoscar.com. With no further ado, let's go look at some charts. Traders, let's talk about the indices in get to those first. Russell daily bar chart. What you're looking at is, of course, the last day we traded up until Friday's close. And what I wanted to point out on this Russell chart is this. The 200 bar moving average. Russell has a nice fat rally, has a battle with it, and fails. So since then, it's kind of built a flag and is having another battle with the 200 bar moving average. But as of this video, it is here. Friday, it settled underneath the 200 bar moving average. Last time that happened, we had a big down day. So you could end up with a down day. On Monday, we'll see what happens. We're definitely going to sell rallies if we can and look to sell, be short for at least a portion of the day in your even the S&P and or Russell. I just wanted to let you know, though, the first battle it failed at the first battle at the 200 bar moving average and is now having difficulty at the second battle. But what's really going on out there lately is everyone is starting to focus on something they should be focusing on. The dollar finally cracking below this wonderful channel. Now, you're looking at a weekly chart of the US dollar. This channel starts in May of 2018, right? Moves completely across, and what do? We stay inside of that channel. We challenge it every now and then, a challenge, but we stay in. A challenge, a challenge, a challenge, a challenge, and a challenge. But here's what starts to change. Between this challenge of that trend line and this challenge, you had 6 months. Between this challenge of the trend line and this challenge, you had 6 months. About the same amount of time between those two. Then suddenly, you jump from a 6-month period in between challenging this line to a 3-month period. Look at the dates. You literally go from you go a 6-month period, a 6-month period, and then it jumps to only a 3-month period before it hits the line again, then a 1-month period. Boom. So you went 6 months, then it went 3 months, and then a month later it cracked again. So it is starting to bounce off the bottom of that channel way more often now, as you see, than it used to, as you can see with the time changing. And we broke it finally, and all the way down to here so far. And as the dollar moves lower, it puts pressure on metals to move higher. It puts them in a pressure cooker and they explode higher. So gold is absolutely doing that. And traders, a round of applause for the OMNI Gold. We came out with one of our videos, as we do just about every night, on July 8th, calling for a $1,900 rally in gold up to $1,900. From that day, look what it's done. It nailed my $1,900 target on Friday. Go, Omni, go! Now, we are bullish for day trading on Sunday through Monday, but I'm not going to issue additional targets past 1920 yet. That's my only additional target in gold for now. I'll do some homework on it this evening, and I'll have more targets tomorrow. But for now, we're projecting out to about 1920 for Monday, Sunday through Monday's rally. We'll see where that takes us. But it is the dollar that's been going down, and look at metals moving higher. Look at the GDX, and one of my YouTube fans asked me to put GDX in here, so thank you for your question, and here's your answer. What do I think about GDX? Well, the Gold Miners ETF looks fantastic at the moment, and that is some kind of a bull flag right there. Looks fantastic as far as I'm concerned. Of course, you know, the gold miners, if you note, you have lots of gaps, and lots of times the market's supposed to go up, and it just turns around and heads down. So a little bit of a herky-jerky type of chart compared to gold itself, but the gold miners do look about as good as gold does as far as I'm concerned. Silver, the Widowmaker. Now, if silver doesn't just turn around and dump like it always does, you're building a flag right here, a bull flag, and if that's the case, silver should end up rallying out of the bull flag. Don't forget, last week we did give targets in silver of $25 and then $25.90. I will update those targets as this week continues on. For now, they remain valid, but I'm not really looking to buy silver. For that reason, I'd prefer to trade in the gold. Palladium has now joined in. Palladium has been dormant and silent for the last few weeks, but look now, the last, I guess, 2 weeks, it just has really woken up and had a death cross, but got quiet after the death cross. Well, now we have a golden cross. That's when the 50-bar moving average gets above the 200-bar moving average. That's called your death cross. Oh, excuse me. week, that's called your golden cross. The death cross is the exact opposite. So now we've got the 50 ball moving average above the 200. That is a golden cross. And palladium, another metal, is starting to react to that dollar moving lower. And here you are, something that's a question that's been presented to me many times in the last 10 days. Oscar, what do you think of the gold-silver ratio? And what I'm here to tell you is this. Gold basically has been outperforming silver for a long, long time, but there is a little bit of hope at the 200 ball moving average right here. Maybe silver will start to outperform on gold a little bit and catch up, but as far as I can see, the silver-gold ratio chart doesn't really mean much. It doesn't show me anything. I just thought I'd bring it to your attention because it was something asked of me many times. The 200 ball moving average gives me a little bit of interest. Barring that, I don't really see anything interesting in this at all. Let's see if it gets above that average, meaning silver starts to gain on gold. And all of this will just continue to take place, especially in the metals, if the dollar continues to crack the way it's doing. Breaks the trend line here, puts in another week, another one, and a bad one here. So we have fallen out of that trend line, or trend channel, if you will. We have broken below the 200 moving average. And as I showed you in the first dollar chart, 6 months, and all of a sudden it goes 3 months, 1 month. Boom, and down we go. Traders, that's the key to everything going on right now. Keep your eyes on that dollar. So traders, you've seen the charts. I kid you not, if you don't know me, I am the best of the best of the best. You cannot find anybody else as good as me when it comes to technical analysis, and I will teach that to you. If you're one of those Robin Hood types that really don't understand this market well and you've just put money in it, because literally millions of younger people across this country have just done that, stop what you're doing and learn this professionally. Come see me in my free trading room at livewithoscar.com and start with a firm foundation. And here's why. If you learn this correctly from the beginning, you've got a firm foundation. You put in a firm foundation, you can build a skyscraper on that foundation. You put in a weak foundation, you will never have a building stand erect on that spot. So you need a firm foundation. If you're learning this, come see me. Let me get you set straight before someone ruins you. livewithoscar.com. All right, traders, I will see you in my trading room. Remember, keep your emotions out of trading. One of the best things you can do to keep those emotions at bay, and I know that's not easy, but try this. Place your stops before you even get into a trade. That will help. And then say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll traders, I will see you all at livewithoscar.com. Past performance is not indicative of future results. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.